I'm Roger Montgomery and welcome to this week's Video Insight. Today we're unpacking two stories that broke over the weekend: Labor's 2025 Australian federal election win and Warren Buffett's retirement from Berkshire Hathaway. So let's dive in. First, Labor's landslide victory. Securing a second term with a stronger majority, Labor is expected to push a bold socialist agenda, creating clear winners and losers. In transport, Labor's vehicle efficiency policy, effective July this year, accelerates the EV shift. Financing and auto financing firms like Fleet Partners, Smart Group and Pepper Money could see a surge in EV leasing demand. Car dealers like Eagers Automotive might get a short-term boost too. Some analysts have suggested parts suppliers like Bapcor face long-term pain as EVs needing less maintenance and parts increase in market share by 2030. But investors should note EVs represent just 0.8% of the national fleet, and the rise of hybrids actually benefits Bapcor. Those who believe fuel distributors like Ampol and Viva Energy are at risk as petrol demand fades need to also think seriously about timelines. It'll take decades and decades for there to be far fewer internal combustion engine vehicles on our roads. In energy and resources, Labor's $7.3 billion energy transition plan is a positive, but perhaps not a game changer. Aluminium smelters adopting renewables could lift Rio Tinto, South 32 and Alumina Limited, while green iron support might benefit BlueScope Steel, Fortescue and BHP, but any benefit is probably going to be marginal. AGL Energy potentially gains from a $4,000 household battery subsidy, boosting installations. Healthcare is hot, with Labor's $8.5 billion Medicare expansion targeting 90% bulk billing by 2030. Diagnostic firms like Sonic Healthcare, Helios and Integral Diagnostics could see higher patient volumes. A $573 million women's health investment further supports this trend, but private insurers like Medibank might face margin compression if premium hikes are capped. Labor's $690 million plan to cut PBS med costs to $25 could drive prescription volumes for pharmacy chains like Sigma and EBOS, especially in regional areas. In housing, Labor's $10 billion pledge for 100,000 first home buyer homes and the $800 million Help to Buy scheme will spark the market. Developers like Mirvac, Stockland and landholders like Ingenia could see more deals. Meanwhile, banks like the Commonwealth, Westpac and lenders like Pepper Money might benefit from mortgage growth. But waiving lenders' mortgage insurance for low deposit buyers could potentially hit Helia Group and QBE Insurance, risking their revenue. Supermarkets like Woolworths, Coles and Metcash face headwinds from Labor's anti-price gouging push and a mandatory grocery code, with ACCC scrutiny also squeezing margins, while union-friendly reforms, including a 2027 non-compete ban and same job, same pay laws, could raise costs by 2 to 3% for contractor-heavy firms like BHP, Downer EDI and Qantas. A revived federal EPA might also hike compliance costs for many companies. The other big news on the weekend was Warren Buffett's announcement that he will retire, stepping down as Berkshire Hathaway's CEO by year end. Greg Abel takes over. Buffett turned a failing textile mill into a $1.16 trillion empire, delivering 19.8% annual returns since 1965 and crushing the S&P 500. Abel, who's 62, has run Berkshire's non-insurance units, like the BNSF Railroad, for over 20 years. Buffett's keeping his fortune in Berkshire shares, announcing he won't be selling a single share, and said he'll stick around for when he is needed, and especially when market events cause opportunities to deploy vast amounts of money. In fact, he said, and I quote, "The time has arrived where Greg should become the CEO of the company at year end. And I want to spring that on the directors," adding, "I will still hang around and conceivably be useful in a few cases. And, quote, I could be helpful, I believe, in that in certain respects, if we ran into periods of great opportunity, I think Berkshire has a special reputation that when there's times of trouble for the government, that we are an asset and not a liability. End quote. I think he's hinting that he's not going anywhere. Of course, Abel's investing track record is unproven. With a record $347 billion cash pile, his deal making in a tough market, think tariff risks and high valuations, will be under scrutiny. Berkshire's 18.9% gain in 2025 beat the S&P 500's 3.3% drop, but losing Buffett's market intuition could prove disruptive. It certainly will be for those investors who mimicked Buffett's buys and sells. His shareholders' letters were certainly investor gold, and his portfolio moves like Japanese firms recently, Apple or BYD, sparked entire trends. I'll leave it there because markets will very soon return their attention to Trump and tariffs. In the meantime, continue to follow us on Facebook and X.